Welcome to this Conveyancing Matters chat with Nicola McKenzie.
Welcome to Conveyancing Matters with Lorraine and Stu. Join us for a chat about all things property.
Hi, so welcome to another Conveyancing Matters chat. Today we've got another special guest back on the show. It's Nicola McKenzie. Hi.
Hi guys, how are we doing? You okay?
Very good, thanks. How are you?
Very well.
Good stuff. And Lorraine, you all right?
Yeah, I'm good, thanks, Stu, and it's lovely to welcome you back, Nikki. Thanks for coming back. We were saying off air, weren't we? Can't quite believe how long it is since you were with us before. But for the benefit of people who are perhaps introduced to you for the first time, do you want to just tell us a little bit about yourself and your mortgage broking company, which I know has been, up for awards and across social media, and you've got your own fantastic YouTube channel. So tell us a little bit, Nikki, about yourself and your company for the benefit of those that don't know.
Yeah, sure. So I'm obviously Nicola McKenzie, co-founder of Dunham McCarthy, and we're a mortgage brokerage, but we're also an insurance brokerage as well, and we also are will writers and do lots of other legal things around probate, etc. But we've been going since 2011, and yeah, we're based in Stafford, but we cover all of the UK. And yeah, that's a bit about me.
Oh,
And
fantastic.
sorry, just to add in, actually, Lorraine, we do have a YouTube channel, which please do follow. It's DM Mortgages if you want more information and general knowledge about the mortgage market.
Yeah, well, we were always very interested in your YouTube channel because, you know, for essentially a fairly niche sort of product like yours, in a way, you know, it's been very successful, and certainly when we were starting out, we were very grateful that you were prepared to join us at all, Nikki. But you know, we were very interested in that, and the fact that what you'd done had made that channel very successful. So certainly it will be, you know, of great interest, I think, to the people watching Conveyancing Matters. So do go and find that. But Nikki, to kind of kick off the chat, really, I mean, I'll look back and Stu will look forward. I mean, sort of last September, with the disastrous budget that really sent shockwaves through the lenders and the mortgage market very quickly. I mean, Stu and I did a chat on it called Mortgage Market Mayhem, but and it would have been nice to get you on at that point, but I suspect you were too busy. So can you just give us a sort of short insight, Nikki, into the impact that budget and the lenders sort of, you know, reviewing their lending criteria and rates so rapidly had on the market?
Oh gosh, that was a very manic time, probably the busiest I have seen mortgages, or the most frantic, shall I say, that I've seen the mortgage market for well over 10 years. So yeah, it was disastrous, or at that time it was anyway. Lenders were pulling rates left, right and centre, and what was very challenging, certainly from a mortgage broker's perspective, is that we'd have a client, speak to them at 10 o'clock in the morning, by midday their rate had gone. So it was kind of a little bit frustrating and awkward for us trying to explain to clients, look, you're going to have to make some fast decisions, really, because if you wait around even for a few hours, deals were being pulled from the shelves. So it was challenging. But at that time, the reason, I mean, a very, very quick summary, obviously the mini budget markets went into a panic. So swap rates were just going crazy, and lenders were not really quite sure how best to price their products. Look, with hindsight, looking back on that period now, I'd say that lenders probably overpriced products at that time, because they didn't really know what the future was going to hold. So rates went crazy, and since then rates have stabilized quite significantly. So there's the good news. I think things are a lot more stable than they looked back in September. And even though, yes, the base rate is, well, the last announcement, it went up, and predictions are suggesting that it's likely this year to peak at around 4.5% is what the general consensus is. But the good news is despite that, fixed rates have still been around the same and actually coming down over the last couple of months. Because of course the base rate isn't directly linked to fixed rates. So for people that are on a variable rate mortgage, yes, the base rate, if it does continue to go up, then that will impact on variable rates, but fixed rates have definitely been stabilizing. So there's the good news.
Yeah, I mean, it's interesting, Nikki. I mean, because Stu and I often talk about the media that sort of either, bigs up or smashes down depending on the headline to be had.
Yeah.
But to my mind, and for people that have been around as long as Stu and I, and I've been around for longer than him, the reality is that property prices were always going to go down and interest rates were always going to go up. I mean, we were never the very low interest rates that the current sort of generation have been used to, were always atypical, and that holiday period was always going to come to an end. So I just take the longer view that the market is really, rebalancing.
I completely agree with you, Lorraine. I think, though, that a lot of the surprise is that it happened so quickly.
Yeah.
Saying that, though, rates have been going up since December of 2021, but gradually. And of course, that whole mini budget, it just sent it into a bit of a panic. I think it just escalated much quicker than we would have anticipated.
I think also a lot of it's to do with the press, isn't it? Because the way it sort of, the budget came in and the speed of it, because it gets splashed all over the news, things like that, I think it creates uncertainty, and it's the uncertainty that makes people panic, isn't it?
It's definitely the uncertainty and the fear factor that is in part encouraged by the press to sell to sell papers is very, very true.
Yeah, it's quite strange.
I was going to say the reality of what's happening isn't how the media are reflecting it at all.
It never is. I mean, I got really mad, and actually one of the first reasons Stu and I hooked up to even start Conveyancing Matters was, I was just getting mad at the beginning of the pandemic how, the property market was being talked down by the press, and actually it wasn't accurately reflecting what was going on. I mean, if the market's going down and what's being reported is an accurate reflection, well, fair enough. But Stu and I say this a lot, Nikki, and you will see it too, obviously. There is a real danger, and it's a cliche, but that these things sort of become a self-fulfilling prophecy.
Yes, definitely.
Yeah.
I think that the media has a lot to answer for, but that's a whole nother conveyancing.
Yeah. That's a separate chat.
Yeah.
So, Stu, you had some thoughts about, the kind of impact on, of the rates and mortgage products, and particularly withdrawals that you were sort of seeing at the coalface.
Yeah, we were sort of chatting before we came on air a bit about offers being withdrawn, and I think the number one question that a lot of our conveyancing clients would have is the risks that they're taking. We particularly in the office saw a lot of offers being withdrawn, and maybe not being rewritten. That's the way we thought it may be. We weren't sure of the bank's appetite to lend all of a sudden, but I think you've got a different opinion, Nick, haven't you? You've seen a bit more than that.
Yeah, so my experience, or our experience as a brokerage at that time, where mortgage offers were being pulled, in my experience, that was only happening in instances where a client probably would have had it pulled under normal circumstances as well, i.e. a change in circumstances, or the mortgage offer has expired and for whatever reason can't be renewed, in part due to affordability stress testing at times as well. But personally, I didn't see a situation where somebody's been granted a mortgage offer and then it's just been pulled for no reason at all, and their circumstances haven't changed. So yeah, that's our experience of it. But yeah.
Because Stu, you sort of, I think at the time of the mortgage turbulence, you as a firm, and you deal with a lot of transactions, you were saying off air you feel you did see more mortgages being withdrawn for reasons potentially other than normal sort of change of circumstances reasons.
We did, but you've got to be really careful how you interpret the information you get, haven't you? Because prior to that period, of course, anything that proved abortive, you barely glanced at, because of course there was 100 new matters that would be winging their way in to replace them. So I think, it's interpretation of what you're looking at. And the one thing that COVID has done is thrown any kind of stats out the window, hasn't it? The stamp duty holiday with the peaks, possibly now a trough. It's just thrown all the kind of stats out the window, and trying to now compare, apples and oranges, you can't. So from what we've seen, it was that initial period. But again, did we get clients pull out? Also, yes. And I think it all just goes back to that uncertainty sort of word that we've mentioned. And, as soon as the clients are not sure what might happen. And I think a general client, what are they interested in? They're interested, are the rates going to come down this year? And our house price is going to come down. That's what the layman's really interested in. So yeah, it'd be interesting what happens this year.
Definitely.
Nikki, in your experience, Nikki, what would be, just a thought that occurred, what would be maybe the top sort of couple of changing circumstances that would cause a mortgage offer to be withdrawn?
Okay, yeah. So a lot of people don't realise that even where you've had a mortgage offer, a lender can still run credit checks in the background for a variety of reasons. And we've seen a couple of instances where somebody hasn't necessarily gone and taken out loads of new credit, but for whatever reason, their credit scores just changed. Credit scores can change for a variety of reasons. They've had a mortgage offer, a lender has had to run a credit search in the background again, and now their score isn't necessarily meeting that particular lender's criteria. We've seen that happen a couple of times. Personally, I think that that's unfair, the way that lenders view that, but that again is probably a whole nother conveyancing matters topic. So we've seen a little bit of that, and I'm trying to think of other specifics. Homes for England, so we were talking off air, weren't we, about, well, this isn't necessarily where a client's circumstances have changed, but certainly we've seen a few clients that have had help to buy mortgages. They've had their authority to proceed given by Help to Buy, and they've also had their mortgage offer. But because now obviously rates are higher than they would have been 6 months ago, certainly, Homes for England are now reassessing some of those cases even after they've been approved, and they're now stress testing it at a much higher rate. So in some instances, the Help to Buy loan that was approved 4, 5, 6 months ago, Help to Buy are now saying, actually, no, this is no longer affordable. And that's caught a few people out, which is a shame, really, because, of course, nothing's changed in the client circumstances necessarily. It's just that the rates are obviously different to what they were 6 months ago.
I mean, that's a really interesting point. And Stu, you do a lot of help to buy work, don't you? I mean, what, Nikki, would you suggest that, if anything, to be fair, that because of course we've got the end of March deadline fast approaching, and I think the Help to Buy transactions are going to cause a lot of stress and a lot of headache for conveyancers between now and then. So what do you suggest that conveyancers do who've got a bunch of Help to Buy files but haven't heard anything about the Homes for England side of things? Should they do anything or just sit and wait and hope for the best?
To be honest, yeah, I would just say sit and wait and hope for the best, because unless you're told that a case is no longer affordable and therefore proceeding, I don't really know what else can be done. It's probably just best to just sit and wait it out, is what I would say.
I mean, Stu, how would you view that from the perspective of your clients? I mean, that would be, and of course, your fees, dare I say.
Well, the fees is a totally different question, isn't it? But in terms of what can you do? I don't think there is much you can do. Yeah. I think there's also, you've got to be a bit careful here where sort of, what is our remit? We've got to be a bit careful in terms of what we do here. And the moment we sort of, venture into the mortgage market and finance, it puts us in a difficult position. I was also interested in what Nikki said there about, the most popular reason for mortgage withdrawals being the client's credit, because I would certainly say here, from what we see, that would account for maybe as high as 85-90% of mortgage withdrawals would be a change in client circumstances, stroke credit. So again, it's interesting, isn't it? What do we do to prevent that? I mean, here we have a report that we do to a client at the onset, which says, hang on the tails of your mortgage advisor, make sure that if anything changes, you let them know.
Yeah.
But again, I think a lot of clients are completely oblivious. A lot of clients do feel that as soon as they've got that mortgage offer, they're tied in, they're contracted with the bank, and they're going to get their money on completion no matter what.
Yeah, that is a very key point, Stuart, that we, as much as we try and tell our clients, look, a mortgage offer is not certainty, it's not a guarantee. Yes, it's as good as a guarantee as you're going to get at this stage, but ultimately the lender can pull something until you've got those house keys. But a lot of clients don't fully, truly understand that.
Well, I think, Nikki, I'd jump in there and say, from what we see on social media, and Stu and I have also talked about this, and I hate to say it, but a number of conveyancers think that. You certainly see discussions between conveyancers on social media where they say exactly, really have the view that you've just explained. The clients have, they think that how can a lender possibly pull a mortgage offer, and I think that's really quite a worrying thing that a lot of conveyancers don't seem to understand, is even after exchange of contracts, even after legal commitment, the offer can be pulled. And Stu, that's certainly something you've experienced and we've talked about a number of times, isn't it?
Yeah, the very, 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 very first conveyancing client I ever had in 1998, I think it would have been 98, 99. I'd got them to the point of exchange contracts, and 2 days prior to completion, the mortgage offer was pulled, and it was because they'd gone and splashed out loads of money on buy now, pay later, sofas, TVs, stuff like that, and their mortgage offer was pulled. They actually managed, I think they managed to get another offer, but it was well past completion. It was dodgy, but in terms of getting it there before the notice period expired. But it just does go to show, doesn't it? It is fraught with danger, and I'm not sure how aware sometimes the clients can be with the lure of offers or putting stuff on credit cards. It's quite easy to do, wouldn't it? Whack your removals on the credit card, and before you know it, your credit's changed.
That's it. I'm interested as well to know both of your perspectives actually on new builds, because Lorraine, I commented on one of your LinkedIn posts about this actually, in terms of, we have seen instances over the last few months. Well, this is just generally with new builds, where obviously builders say that the property is going to be built by X day. It's not. The mortgage offer expires, the lender won't extend it. But of course, in the current climate, the rates are obviously a lot higher. So we've seen a couple of instances where, due to the builder's fault, somebody's now paying £300-400 more on their mortgage, because obviously they're not able to get the same rate that they would have been 6 months ago had the builder have stuck to their deadline of when they said that they would build the property.
Well, Stu, you do a lot of new builds, so you first.
Yeah, we do stacks of new build, and the key point on that is simply to advise the client, because of course we can't control how long it's going to take in terms of the builder completing the plot, and of course we can't control what the bank might or might not do in terms of the offer, but we make it absolutely crystal clear to the client that is the risk they are taking. With any kind of extended completion date, whether it be 3 months, 4 months, 6 months, a year, they are taking a big risk if their mortgage offer expires prior to that anticipated build date. So I don't always think it's the builder actually delaying the build. Just generally, often the mortgage offer will expire prior to the build date. But again, we make it clear that the client should be speaking to their broker and to check that there's no reason that the broker would be aware of in terms of getting a new offer. They haven't picked up products that may have a limited time. Stuff like that.
Yeah, definitely.
Yeah, so we make it clear, make sure everything you do is, the broker sees no reason why the mortgage offer wouldn't be extended, on the basis your circumstance haven't changed. But it's really difficult at the moment, isn't it? It's such a risky area because, of course, with the sort of economy, people might be, for example, being made redundant or whatever happens. It's a real risk area in conveyancing. And from our point of view, we can't make the client's, decision as to what they do, but it's the advice that we give, so they're empowered to make the decision that's important.
I think the difficulty with new builds, Stu, leading on from that though, is particularly with, funny enough, I think there's a particular psychology around new builds. Well, frankly, pressure from the developer quite often, pressure from the site office. They've paid a reservation deposit that, there aren't many other circumstances in life where somebody could walk into a converted garage, hand over 2 or 3 grand and, willingly. without talking to a lawyer or anybody about the money, and then come out and think, gosh, I've got to commit to this in 28 days. I mean, it's the bizarrest thing if you think about it. I think the issue is that clients just have, because of the pressure, the heaping pressure on their conveyancer, probably, I suspect, Nikki, heaping pressure on their mortgage broker as well. And they often don't want to hear what we've got to say, actually. And I suspect, so any reinforcement of the risk in particular, and new build, as Stu said, is fraught with risk. There isn't anything that isn't risky about new build in many ways. The roads aren't going to be finished, probably. You're reliant, there's planning issues. There's just an absolute legion of stuff. And I do a lot of training on it. Stu does a lot of it in practice. I mean, I've done a lot in practice and acting for developers, but now I train on it more than anything. In fact, it's one of my most popular courses, interestingly. Something that people always, I think, feel the need to know about. And I suggest to conveyancers, actually, that what they're doing, Nikki, is they should be really in their standard reports, highlighting the risks, doing a list of risks with perhaps big red crosses next to them, because there's a whole menu of things that the conveyancer is not going to be able to resolve prior to exchange of contracts. And the client has to understand that risk. And I completely agree with Stu. Absolutely at the top of that risk list would be the fact that you are committing yourselves to a purchase that at the time you commit to it, you actually are not certain you're going to be able to finance because of the mortgage offer situation. And I absolutely agree. But any reinforcement of that particular message that brokers can give, anybody can give, I think has to be a good thing.
Agree, but we had an instance where the mortgage offer lasted for quite a while. I can't remember the specifics, but it was specifically a new build mortgage product. The builder took I think the builder took something ridiculous, like 8 months longer than they said they were going to take. It was like, this was an extreme case, but in a situation like that, I don't know, you just kind of have a bit. We always
advise our clients to approach the developer about a long stop date. So even though we know the likely answer is going to be no, we always make a point in our report to the client to say, look, if your anticipated build time is sometime in October and your mortgage offer expires in December, logically, you might want to ask the builder whether they'd agree to a long stop date being the date your mortgage offer expires. That way the clients are covered, but of course the builders won't agree to that 99% of the time. And I think from a relationship point of view, the clients have built up that trust probably with the builder's site office, and where maybe they're in and out of that site office, I think they side with the trust of the site office and probably see what we do as more of a process and are less inclined to evaluate what we say more than the builder's representatives.
Well, often, Stu, of course, we're telling people things they don't want to hear.
Yeah, that's a difficulty.
That's true, but also as well, Lorraine, in the nicest way, but the communication of a conveyancer isn't the same across the board either. It's another.
Yeah, no, that's completely fair, Nikki.
Sometimes I have some of my clients and they come to me and they're just like, look, the conveyancer isn't communicating with me. I don't know what's going on. No, there's two sides to every story, but in some instances, I'm not sure that things are highlighted as much as they perhaps could. It could be a combination of that, selective memory from the client. There's a whole host of issues, but I sometimes think that communication could be clearer sometimes with conveyancers.
I completely agree, Nick. I would have to say, though, really, once the matter's exchanged, that that if particularly the transaction is going to fall into a dead zone as far as the conveyancer is concerned, because they've sort of got nothing to communicate at that point.
That's true. Same with mortgages. When it's offered, we kind of that's kind of conveyancers.
You've sort of done your job to that point, so there really is nothing else to communicate necessarily. And as Stu said, if you're saying to your client, keep in touch with the site office, then there isn't much more at that point. I would suggest the conveyancer can do. I mean, one sort of thing I always point out to conveyancers on courses as well is, again, it's a sort of dull little point, but it's to make sure that if there is a notice to complete period in the contract, which there usually is, that the mortgage lender gives enough if the mortgage lender needs to re-inspect the property before they will actually allow drawdown of the loan, that there's if the developer wants completion in 10 working days and the lender wants 10 working days to re-inspect and then a further 7 working days for submission of the certificate of title, well, immediately the conveyancer is probably, you know, potentially putting their client in breach of contract if they don't try to tie up those timeframes. And as Stu said, the developers are usually frankly quite intransigent about these things, and I don't quite understand why, but there we go.
I think also the other point as well that maybe we haven't hit on is the supply of the product. Of course, you know, the clients have been desperate to get hold of property over the last few years and there haven't been any to sell, so they've probably had to take more of a risk, where of course, yeah, you know, the sort of, you know, the matrix of supply and demand might slightly change this year.
Yeah, very good point.
Oh, I hope so anyway. Well, Nikki, we could actually, we said this last time, we could talk to you for days, really. So thanks ever so much for sharing those insights, particularly on the Help to Buy, which I think is very, very relevant for conveyancers right now, and the new build observations. It's really interesting to get, you know, as Stu said at the onset, you know, a more balanced view on these things, because we tend to have one particular perspective and quite often don't have time to look at everybody else's. So it's really kind of you to join us, Nikki. Thank you.
Thank you so much for inviting me, guys. And next time we shouldn't leave it so long.
No, let's not. Let's not. Well, maybe you can join us at the next Conveyancing Matters live event, Nikki, which we'll put out there. We'll do one in the middle of the country sometime this year, and hopefully we'll get to see you face to face.
Most definitely. Thank you both.
Take care. Thank you.
Take care, guys. See ya.
Bye.